Good morning, traders. Richard Jacobs here, and welcome to this week's edition of the Underdog Perspectives Report, where we reflect on the trading week that's passed and also form some views and perspectives on what we think the market's going to be doing over the coming week. As always, what we have up on the screen is a daily chart of the top 40, and let's kick off with what's happened in the past week. You'll recall from last week's report that we found ourselves around about this point of a year, and what we said was the market was in a retracement to the upside, and we had this rounding top happening on the stochastic, although it hadn't reached overbought conditions as yet. And so we surmised that there was a potential for the market to continue to the downside from the outset last week. Our alternative scenario was that we would see a deeper retracement playing out over the course of the week, and really it's that latter scenario that's actually played out in the market, because what we saw was that the market continued to push up in the early parts of the week all the way back up, and it actually pushed that stochastic into that overbought zone that we'd been eyeballing. And then what we had was on on Thursday last week, the market popped up into this zone here between the 50% and the 61.8% retracement leg of this or levels of this leg of the move down here, this break of structure leg to the downside, call it this impulse leg, and it put in a bearish looking candle, sorry. And then on Friday, we actually had a lower low and a lower close printing over here. At the same time, we got the stochastic pushing down sharply below its signal line and out of that overbought condition. And that actually lined up some negative divergence for us, as we saw the stochastic, as indicated by these blue arrows, putting in a higher high while the price looked to be putting in a lower high. And this was actually something we highlighted to our daily subscribers in our daily report as a potential for a trading opportunity, and we in fact managed to get short on this potential continuation move to the downside, where we got into the market on the short side at 45,850 with our stops at 46,500. It's indicated by this so that's our risk area over here, is indicated by this this rectangle, this red rectangle over here, and we're really looking for the market to push all the way downside to the downside back to this swing low right down over here. So that's a trade that we are involved in and that we have shared with our daily subscribers as well. And as looking at the price structure at the moment, we did put in, as I said, that lower low and lower close on Friday, and really now we're looking for some kind of a continuation of that move to the downside. The market did end well off its lows on Friday, off its intraday lows, so we would need to see quite a significant push down early in the week for that continuation move to the downside to confirm. In fact, we'd have to see the market put in a lower low which comes in at 45,496. As I look at where the market is at the time of this recording, it's sitting at 45,787. So close to 300 points off that low. So we may not see that move playing out cleanly out of the blocks at the start of the week, but certainly we'd expect the market to continue to the downside over the course of the week as things play out. And that's really what we're seeing from a structural perspective in terms of our market. Just quickly looking at volatility levels, worth highlighting that continued increase in volatility trend is playing out as the normalized ATR continues to increase from its end May lows, which is great for us as traders. And we've now, I think we're just tapping in at these levels. Let's just double check where we're tapping in. We're coming up into these levels, these end Feb levels of a year. And so it's just a case of it would be great to see the daily ranges continuing to increase in this market, and for this normalized ATR to continue to tick up over the balance of the winter and into the summer months, where we're really going to be looking for an unlocking of some range in terms of our intraday trading specifically. So that's what we're seeing from a structural perspective, folks. Let's just swing over to some of the international markets and see what's happening on that front. Okay, let's start off with the Rand dollar exchange rate. We're looking at it through a slightly different lens. This is a daily chart, daily candlestick chart of the Rand dollar. And what you can see here is just going back a bit, from the end of March, we had this impulse leg, this breakout, this weakening of the Rand over here. And since then, we've really been putting in what we would term a complex retracement, as the market puts in lower lows and lower highs inside of this breakout leg. And that played out all the way until the 3rd of July, where we actually had this breakout happening over here, right here, as the market put in a higher high. And it's actually broken this previous price structure resistance, now potentially support, coming in at 13.13, and we've pushed up and we've put in this higher high here. And really it's a question of what do we see happening from here. The last couple of days, not much has been happening. The market seems to have overcooked itself a bit in to the weak side, with that 1350 acting as a bit of resistance over there. So one of the things we did anticipate or do expect to potentially see is a throwback here, some kind of a retracement, even back towards previous price structure support, if not all the way there, before we see a bigger continuation move to the weak side or to the upside in terms of the Rand. So certainly some consolidation does seem to be on the charts over here. So in the absence of significant news flow which could impact on the currency directly, one would expect the currency impact to perhaps be a bit more moderate or muted in terms of the top 40 over the next few days. So potential for some consolidation happening over there. If we look at what's happening on the US side, on the S&P, let's just get that up. Still in that, and this is the daily chart again, we're still in that bullish trend to the upside. We've had the retracement back into this previous price structure over here. And really, it's been quite messy trading action over the past couple of weeks, really, as the market bumbles along sideways over here. One of the things the bulls will want to watch out for is there is a potential head and shoulders coming in here with a left shoulder, a head, and a potential right shoulder. And if we were to see a break of this 2407 to 2400 level happening on the S&P, that would certainly open the room for further potential downside over here. But at the moment, the market continues in an uptrend. And again, it's a case of it's on the short term. For the short term, we're talking days. It's quite lackluster in terms of what it wants to do from this point onwards. We haven't really seen a leg to the upside, a continuation move to the upside playing out, and we had this retracement playing out in this month. Really, we haven't seen the continuation move to the upside starting this month. Market's really struggling to find its feet this month, jumping up and down over there. So this is something to watch. We want to keep our eye on what's happening on the S&P to see if the market can gain some traction and continue start pushing to the upside over here, or if we're just going to see that fail to the downside, the break of structure, this potential head and shoulders pattern playing out. So again, no massive direction out of the blocks in terms of what's happening on the S&P. The daily candle is, as it stands now at the start of the day, it looks a bit more bullish. So maybe we see a bit of upside out of the blocks, but not significantly so, unless the market can really get some momentum behind it. If we look at what's happening on the, let's look at gold. Gold's been interesting in the sense that it's been a bit range bound. We had this push up into the April highs over there. We had a deep retracement playing out back into previous structure support. Then we had this push to the upside again, and the market really failed to hold these levels and started looking like it was trading in this range between about $12.15, $12.14 and $12.95, $1,300. And what's interesting here is that maybe we're starting to see a break out of this channel to the downside over here. And I say maybe, it's very early days in terms of a potential break here. So just something we want to keep an eye on. If we do see a comprehensive break to the downside over here, that could be indicative of some risk on in terms of the equity markets, and that could open some upside on the equity front. Out of the blocks, it's a bit bearish. So again, plays into the hands of what we're seeing on the S&P with a bit of out of the blocks bullish momentum, but again, we need to see something a bit more emphatic before we get too excited to the upside in terms of the overall market. And finally, let's look at what's happening on the oil front. Sorry, I just want to put up the Brent crude, which is the one I generally look at. There we go. Sorry, I've been playing around with some potential trading systems over here. But what do we want to, which is why you got all these blue markings up on the report. But what you want to be looking at here is that Brent crude is in a nice downtrend, putting in lower lows and lower closes on the daily, and we've just had a retracement back up here on the daily, and it looks like a continuation move to the downside. So again, we actually expect this market to continue to the downside and push down towards this $45 level over the coming days. So bit of bearish action or trend sitting in place on the oil front. So sorry, putting all of that together within the context of what's happening on the price structure, we've got this potential continuation move to the downside playing out in our top 40, but it is off its intraday lows from Friday. The market's about 300 points off those lows, and we're seeing a bit of bullish momentum out to the upside in terms of the S&P, bit of potential bullish momentum in terms of potential risk on as a result of gold breaking down out of that channel. And we're seeing the rand dollar not really adding much to the equation at this point. Looks to be in a bit of consolidation. So don't be, one would probably expect some kind of a positive open on to the week playing out. And I wouldn't be surprised to see a bit of consolidation here before we find some direction again. But as things stand at the moment, the move is, in our view, to the downside, and over the balance of the week, we would expect to see the market putting in some lower lows and continuing to push towards the swing low over here, which is how our short trade setup is structured at the moment. So that's pretty much it from a structural perspective and what's happening around the world. Let's just have a look at a trade of ours that we highlighted in the weekly report that did hit target. That's Aspen, and it was one that took some patience, 17 days in this trade. But you'll recall what we had highlighted was that this market had pushed up, put in a higher high over here. Sorry, let me just zoom out. It had just broken structure to the upside, put in this higher high, and we'd watch this retracement all the way back into this candlestick here on the 9th of June, which we regarded as quite a bullish looking candlestick. Stochastic had moved oversold. And so what we were doing is we were really looking for a continuation move to the upside. We got involved in the trade, I think, on the 12th of June, and from there it really just bumbled along sideways for a week or so before it actually started to get traction and gain momentum to the upside. But then it did so pretty well. We managed to roll stops a few times as the market just pushed up all the way into their target levels for a 2.77 to 1 reward to risk. And as I said, all you had to do there was really just exercise some patience, because it did take the better part of 3-4 weeks, 3-4 trading weeks to actually reach targets. But nice to actually be able to show you guys the kinds of things that we do highlight to our daily subscribers and the kinds of trades that we do take, and nice for it to actually be a positive one. On that note, we do have something on our radar which I thought I'd highlight to you guys. It's a bit of a quicker one. It's on First Rand. It's a short opportunity, and What you want to be doing here is, I mean, we've got a move to the downside happening here. The stock is definitely in a downtrend. We had a deep retracement playing out before we had a continuation move to the downtrend downside again. And what we've had is a sort of call it a mini retracement within this leg of the move. And so we're not shooting for major targets over here. All we're doing is we're looking at this particular leg of the move running from about the 25th of May down to this low here on the 21st of June. So about a month's worth of trading activity to the downside. We've had a bit of a retracement over here, quite a shallow one, back into the 38.2 of this leg of the move. Stochastic going overbought over there, sorry, and looks to be coming back down over its signal line out of that overbought territory with a bearish looking daily candlestick printing on Friday. Now what we're looking for firstly is, and this is what makes it a bit tricky and difficult, and you probably need to exercise your own discretion in terms of your own trading rules about when you actually get into this trade. From our side, we actually want a trigger and then a pullback all the way back up into this 38.2 on an intraday basis, and that comes in at about 48.55. Swing stops at 49.20, just above the swing high over here, and we're looking for a move back into the previous structure, previous lowest closed, which is coming in at about, let's get that number, 47.10. So that's a 2.25 potential reward to risk setup over there. But as I said, what makes it difficult is you need quite a deep intraday retracement to get involved in this trade. You'd need that pullback into the 48.55 after a trigger of the trade. So one that may actually just get away from us, but again, we're not too fast. If that does happen, we don't chase trades. There are always plenty of opportunities out there for us to get involved in the market, but just something for you guys to consider if you're looking for a potential trading opportunity over the coming week. So that's the potential trading opportunities, individual stocks. Let's just have a look at how our intraday systems are doing. So I'll pull that up now. And there we go. That's our Heikenhashi intraday trading system. Our daily subscribers receive each and every one of these signals as we trade them in our trading room. And what's nice to see is that towards the end of June, as we came into July, we really finally broke the new equity highs over there, and we touched in at 3,000 points for the year. So that's pretty decent. We've done we've done 142 trades under the system with a 41.5% win rate and a reward to risk of 2.05 to 1, which is just slightly under our long-term averages for the system. And really, if you go all the way back to that volatility chart that we pulled up on the top 40, you'll see that there's quite a close correlation between our equity curve on this system and what's happening in the market in terms of volatility. And so it's this improvement, this push to new equity highs is really on the back of increased volatility, which is why we're extremely happy when we see volatility returning to the markets. Whoopsie. And guys, that's pretty much it for this week. As always, if you find this useful, please either drop me a line or drop a like on this video. If you want to get involved in some of the other things that we do here at Underdog Investments, also please drop me a line. I've included some options up on the screen here, things like our Underdog Trader Development Program, which is enjoying great success at the moment, as well as some of the proprietary trading systems like the Heikenhashi system that I just highlighted the equity curve for. But that aside, what's really I think going to be beneficial to you if you were wanting to develop your trading further is to just get involved in our daily as a daily subscriber. It's not I don't think it's a hell of a lot of money. It's $114 a month. And you get a daily report just highlighting the kinds of analysis that we do, similar to what we do in the weekly report, just drilling down a bit further to some of the intraday stuff, and giving a bit more perspective on that. So if it is something that you want to get involved in, please drop me a line, Richard at underdoginvestments.co.za. Always happy to talk about all things trading related and to help you with any aspects that you may want some further input or a different perspective on. Guys, that's it for the weekly perspectives report. I hope you have a good trading week ahead, and I shall be speaking to you next week. Cheers.